Hey, welcome back. It's Jason Walter here. The data analytics firm Black Knight reported their monthly mortgage monitor report today for the month of March. This monthly report shares details about residential delinquency rates, foreclosures, and other performance stats for U.S. mortgages. I don't always share this report on my YouTube channel, but I do personally follow it on a monthly basis. This is because I want to know, are delinquency rates getting better or are they getting worse? So in other words, is the housing market improving or not? In any case, they report some good news and some not so good news. So let me share the report with you today. And this video, like most of my videos, took hours to make due to all the research involved. So I greatly appreciate it if you hit the like button. That helps support the growth of my channel. And thank you everyone who has subscribed to this channel already. We actually reached 25,000 subscribers the other day, and I'm beyond grateful. So thank you everyone for your support. 1 year ago, we had about 3,000 subscribers on the channel. So that absolutely blows my mind. So thank you everyone for your support. And let's go ahead and dive in today's video. Black Knight reported that the US delinquency rate for mortgages fell about 16% from February to March. Black Knight noted that March saw the largest monthly decline among delinquencies in 11 years and the second largest monthly improvement ever recorded. Part of the reason for this decrease in March is due to the fact that only 217,000 homeowners became past due on their mortgages, and that was the lowest delinquency inflow of any month on record. Because I'm a housing market data nerd, what I most like about these reports from Black Knight is that they report delinquencies by stage. So they report delinquencies by 30 days late, 60 days late, and 90 days plus late. For example, the number of loans 30 days and 60 days past due fell below pre-pandemic levels. The number of loans 30 days past due fell 34% from February and 50% from the same time last year to hit an all-time low. In addition, 60-day delinquencies fell to near record lows as well. This all sounds very good, right? Well, not so much, because the number of homeowners 90 or more days past due remains nearly 5 times what it was prior to COVID. They noted one possibility for early stage delinquencies falling well below pandemic levels could be due to an elevated share of homeowners who may be rolling forward to later stages of delinquencies when they otherwise might not, due to participation in available forbearance programs. This makes sense because they are reporting homeowners as delinquent even if they are in forbearance. In other words, if the homeowner is taking advantage of the forbearance program and they're getting permission to stop paying their mortgage, is that really considered a delinquency? I think most would agree that a delinquency in forbearance is a lot different than someone who's delinquent outside of forbearance. It's like comparing apples to oranges. In any case, despite the overall improvement of delinquencies for mortgages, more than 5% of mortgage holders, including those in forbearance plans, remain delinquent on payments, and that's up from 3.2% before this pandemic started. And here's a really good graphic that I found that shows the number of mortgage delinquencies by severity since July 2019. As you can see, delinquencies started increasing dramatically starting in April 2020. Part of this was from people entering into forbearances because the CARES Act was passed in late March last year, which allowed many homeowners to enter into forbearance. What I found most interesting on this graph here is that total delinquencies only increased for a couple of months when this pandemic hit. Ever since then, we've had this slow, gradual decrease. Also, as I mentioned, 30 and 60-day delinquencies are less now versus March 2020. In contrast, 90 days plus late have been slowly decreasing since last summer, but still remain significantly higher than when this pandemic started. Improvements for mortgage delinquency rates were also seen across the nation. So every state had at least a 10% decline in their delinquency rate on a month-over-month basis. Utah and Idaho had the highest decreases at more than 20%. And looking ahead in April, the vast majority of homeowners have continued to make their mortgage payments, which is obviously a positive sign. Through April 23rd, 91.6% of borrowers made their mortgage payments. That's up from 91% in March. This is now the largest percentage since the beginning of this pandemic. In my opinion, there are three main reasons why we have a high rate of homeowners paying their mortgages. Number one, for those who just filed their taxes, they may have received a refund, which helps them, of course, pay their mortgage. And number two, the US government recently sent approximately $360 billion worth of stimulus checks, as well as a boost to unemployment insurance. And number three, personal income soared 21% in March, and that was the biggest monthly gain ever recorded. However, most of this increase could be from government stimulus. This is because compensation to employees only increased 1% in March. Meanwhile, personal savings remains at historically high levels. This March, the personal savings rate rose to 27.6% compared to a record high savings rate of 33.7% in April 2020. In mortgage loan forbearance news, as I reported yesterday, the number of homeowners in forbearance actually increased last week for the first time in 9 weeks. We'll have to keep an eye on this because approximately 240 plans are set to expire within the week. In addition, the next significant round of reviews of forbearance exits will take place in June for approximately 890,000 homeowners, many of which will be at 15-month reviews for early forbearance entrants. These are the folks that qualify for an 18-month forbearance plan thanks to all the extensions that were announced just recently. I'm guessing a large portion of these folks will do another extension for 3 months to get the full 18 months, but we'll have to see. I'll definitely keep you posted. As of now, the first wave of 18-month forbearance expirations is slated for the end of September, unless, of course, it gets extended yet again. Black Knight also reports some really good information about what homeowners have done when they ended their forbearance plan. So let me share that with you right now. They reported that of the 7.1 million homeowners who have entered forbearance plans since the onset of this pandemic, 2/3 have since left forbearance, and approximately 45% of plan participants have left and are re-performing. In other words, they're paying their mortgage payment again. In addition, 15% have left their forbearance and have paid off their mortgages in full. However, what was most concerning to me was the following. So let me share this with you. As of April 20th, there are approximately 160,000 high-risk forbearance exits who have left their plans, are not in a loss mitigation, and remain delinquent. That said, more than 100,000 of these borrowers were already delinquent heading into this pandemic. What this basically means is that the majority of these homeowners were already delinquent on their mortgages when they entered into a forbearance plan. That's very bad because their lender more than likely reported these folks as delinquent even when they were in forbearance. This also means these homeowners exited their forbearance plans without entering into a repayment plan with their loan servicers. For example, the Mortgage Bankers Association reported today that out of all the homeowners who have ended their forbearance for the period June 1st, 2020 through April 25th, 2021, 14.6% represented borrowers who exited forbearance without a loss mitigation in place yet. What these folks should do is reach out to the loan servicer to discuss ways of repaying all their missed payments. Otherwise, these folks may eventually get foreclosed on. Homeowners have options once they exit their forbearance plan. I talk about this on the channel all the time. But if you have a federally backed mortgage, meaning you have an FHA loan, a VA loan, a USDA loan, or a loan backed by Fannie Mae or Freddie Mac, you have a lot of options of paying back all your missed payments. And you are not required to make a one-time lump sum payment of all your missed payments. I won't discuss all the options in today's video, but I actually made a video about that. I'll leave a link up here. I'll also leave a link in the description below for you as well that discuss all the options for those who are exiting their forbearance plan. I'll also leave a link below for the Consumer Financial Protection Bureau's website for all the options available to homeowners after they end their forbearance plan. Okay, changing gears slightly, a few of you have commented on my channel over the past couple of weeks asking what is approximately the credit score that people are using when they refi or purchase a house. And I really didn't find too much information about this until now, so let me share this with you. Credit scores for refis and purchases reached an all-time high in 2020. This year, credit scores for refis have decreased slightly, but scores have increased to another record high for home purchases. Overall, in March 2021, the average credit score was around 735 to 740. And lastly, to give you a mortgage interest rate update, mortgage rates have continued to fall since the beginning of April. According to the Mortgage News Daily, the average 30-year fixed-rate mortgage is currently about 3.1%. This is down from the year-to-date high of 3.45% that was set on March 30th. If you haven't refied already, then you may want to do so because experts predict that mortgage rates may increase to 3.5 to 3.7% by year end. If you enjoyed watching this video, then please hit the like button. I greatly appreciate it. And also consider subscribing if you haven't done so already. I post videos about how this pandemic is affecting our housing market. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.